Okay, here is a graph here on top of gold here over the last 3 years from stockcharts.com. And we see that the gold, it had a run up here, and then it's cooled off over the last couple of years. And then down here below we have 3 years of the dollar USD. I believe the dollar USD it's definitely an average of the US dollar traded against a basket of foreign currencies. I believe it's 17 currencies. And we see that when the dollar is falling, it pushes gold up. And when we see here that this trough here was that when it came down, it pushed the gold up. And then when the dollar turned around, it made downward pressure on the gold. And so there's somebody called the dollar trader, and the dollar trader, what he does is while the dollar is rallying, he stays in the dollar USD, and when it reaches a peak where it starts to fall, he goes back into gold. And when gold rallies and it hits a peak, then he gets out of it and he goes back into the dollar USD index. And so one thing that's very interesting is that there's a euro trader as well, and he trades between the euro index and the gold. And there's a yen trader. He trades between the yen and gold as well. And what's very interesting is that in the third quarter here, we'll notice that in the third quarter here, over here, that gold tends to decouple from the dollar, and it has a rally here in the third quarter. And the reason for these rallies here in the third quarter here is that jewelry companies buy silver and gold to make jewelry for Christmas and Indian weddings that occur mostly in January. And so this is when, in the third quarter here, where silver and gold tends to rally. And since we also notice that when we have the market cools off in the first half of the year, like in last year, then you have a very strong run-up in the third quarter. And here, even in the year before, it didn't really cool off that much in the first half of the year. You still had a run-up in the third quarter. And over here, there was also a run-up in the third quarter. So the third quarter tends to be the safest time to buy gold mining companies, silver mining companies. The indexes like the GDX is an ETF on gold, on precious metal mining companies. And there's also the Fidelity FSAGX. They tend to be the best time to buy those, according to the Stock Traders Almanac, is July 20th through September 10th. But I find out that if you wait till September 10th, sometimes here the Septembers can be very, very sharp down because everybody's reading the Stock Traders Almanac and they know that September 10th everybody's going to drop it. So they tend to sell at the end of August just to get out before everybody else does, so they don't get caught in that down market. So the best time to own GDX or FSAGX or a silver or gold mining, or just gold or silver straight, GLD or SLV, or the spot gold would be in the month of August. That's the best time, safest time to own it. And you can consistently make 10-15% extra every year by just putting your money in silver or gold during the month of August. And that you can keep, if you have a Roth IRA or a traditional IRA, or you've got control of your pension fund and you have a traditional IRA, then you can keep making 10-15% a year this way, and it'll push your retirement fund up very safely. This can be done with a lot of money because silver and gold isn't going to go bankrupt. You can also do this on the gold mining mutual fund GDX or FSAGX, and mutual funds aren't going to go bankrupt. So when you get them in, when the fundamental demand is going to push them up, it's a very safe time to make a trade on these. I hope you liked the video. Have a nice day. Bye-bye.